So hello guys, welcome to today's video. And this video I'm going to share my new trading technique with you. Trust me, this trading technique is 80 to 90% sure, provided you watch this video to the very end and implement every single rule I'm going to tell you about this particular trading strategy. Trust me, with this trading strategy, whether you are a beginner, an expert, it's very easy to learn, easy to implement, provided that you follow the rules that I'm going to share with you in this video. So hello guys, welcome to my channel. Welcome to Paris Crypto and Forex. On this channel, I mainly focus on how you and I can make money online through crypto and forex trading. So if you want more content like that, don't forget to smash that subscribe button, like this video, and tell me what you feel down in the comment section at the very end as well. So without further ado, I'm just going to take you straight onto my computer and then share with you every single thing you need to know about this trading strategy and how you can also start implementing it to start making money as a forex or crypto trader. Trust me, this technique works in both markets, provided that you follow the instructions carefully. So with that already said, let's get straight into today's video. So hello guys, so this strategy is actually called the support and resistance strategy. I know you've learned it from a lot of YouTube channels, but I'm going to break it down to make it simpler for you, because personally I've learned it from a lot of channels also back in the days, and I would say not every channel make it easy to understand. So I'll be using a normal mindset, which is a normal shop mindset, to make it easy for everyone to understand, whether you're a beginner or not. So now, coming over here, let's first of all understand this strategy. So this strategy is called the support and resistance. So first of all, what is support? Support is simply whereby the market price is at its lowest. So what I mean by at its lowest is that when that particular product you want to buy is really cheap. So when a product is very cheap, which is at its lowest, there are a lot of people actually trying to buy that product, and that is what happened. So when it comes over to forex, assuming, so take a look at this pair here is British pounds versus Japanese yen. That is what I'll be using as an example. So this particular level here, let me go back. So this particular level here is called a support level. This whole level here is considered a support level. So the whole of this level here is considered a support level, and I'm going to explain why it's called a support level. So the reason why the whole of this place is called a support level is that if you take a look at it carefully, you can see here the market was at its lowest, then it moves upwards, and it came back to its lowest again, move upward, came back again for the third time, fourth time, fifth time, and the sixth time. This to tell you that the market was at its lowest. So what happens when this market is at its lowest? Whenever the market gets to the lowest, there are more people looking for this particular product there, because the price is really cheap right now and people are trying to buy, and that's what you do as a forex trader. You look for when the market is down and then you buy it upwards. That's simply the approach. So that's simply what happens at the support level. So when the market gets to this support level, there are more people trying to buy this particular product, so the price will eventually increase. So for example, you move on to the Nike shop and they wanted to buy a pair of Nike shoes. So assuming upon reaching there, you guys are 20. So there are 20 buyers. However, Nike only have 10 pairs of shoe. So what do you think Nike will do? Nike will increase the price because you guys are more the demand of that particular product is way more than what they actually have. So in that way, the price tends to goes up, and that's the same thing with forex trading. So that's simply all the idea behind support level. The support level is simply when the price is really down, meaning there are more people demanding for the product, but there are less pieces of that product, so the brand will tend to increase the price of that product as compared to any other one out there. So that's simply the idea behind the support level, and I hope you understand what I mean by the support level now. So now that we are done with support level, so now let's get to the resistance level also and try to understand what a resistance level actually means. So now that we are done with the support level, I believe you've understood everything about the support level. So the resistance is just the direct opposite of support level. So now let me break down support level to your own understanding as well. So for support level is simply assuming when you go to the Nike shop, the shoe was to be sold at $10. At $10. Sorry about my writing. So the shoe was to be sold at $10, but then the reason when you got there, the shoe was to be sold at $10, meaning this particular point here is the $10 point. But then eventually, after getting to the shop, you realize that okay, you guys were way more than the number of shoes available. There were just 10 pairs. 10 pairs. So assuming the pairs is the GBP here, which is the British pounds. So just forget about my writing. There were just 10 pairs. So from the 10 pairs now, so since you guys are 20 but there are only 10 pairs available, Nike decided to increase the price from $10 to $100, which is this point here where the shoe is now sold at $100. So a pair is now $100 instead of the initial $10. So now what happens here? What happens here is that not everyone among the 20 people who went there for the 10 pair of shoe can actually buy it. So what happens at this particular point? What happens at this point is that only 5 people, so assuming out of the 20 of you who went there, only 5 people were able to afford $10, meaning they are getting only 5 pairs. So now left with 10 pairs for 15 people to actually, left with 5 pairs for 15 people to actually buy. So out of 10 pairs, it's no more. Let me change that one color. The 10 pairs is no more. Now we are dealing with just 5 pairs. So now let me take that one to the top. So now we are left with just 5 pairs. So now let me just write it up so that you can get to understand this carefully. So now we are left with 5 pairs. So now at this price of 5 pairs, Nike is telling that, okay, the shoe is now to be sold at $100. But then out of you, the 15 people who are left, which is started with 20 people, so 20, at this level there were 20 people actually buying. But then at this level now there are only 15 people. So now 15 people for 5 pairs of shoe, and Nike is telling that the price is $100. So now what happens at this particular point is that since not every one of you were able to afford it at this particular level, at the $100 level, assuming, let me say, out of the 15 people that were left, additional 11, so let me just say additional 12 of the people there now went home. So now 12 went home. So what is left here? Left with 5 pairs for 3 people. So now left with 3 people to contest for the remaining 5 pairs. So what happened here is simply the supply is way more than the demand, meaning there are 5 pairs of shoe and 3 people are not willing to buy the 5 pairs. So what happened? Nike would then decrease the price from $100 back to $10 so that the rest of the people available there can just buy the remaining pairs of the market. So that's simply what forex trading is. When trading support and resistance, it's simply you look for when the price is low, then you buy it upwards, and then you look for when the price is at a very highest level, then you buy it downwards again. This is simply the idea behind support and resistance, and I hope you understand it now. So now, giving you a clearer view using a forex sentiment is simply when the price is very low, there are a lot of people buying it. So when there are a lot of people buying it, the price will then tend to push upwards because there are a lot of people pumping in money, there are a lot of people demanding, and there are less manufacturing, meaning the price will go up. And then when it gets to the very top, now there are a lot of products available, there are less people now demanding for it. So what happens is that the company then reduces the price back to the down level. That is the idea here. Initially, the price of the Nike shoe is $10 per one, but because there are a lot of people buying it, Nike decided to take the price up to $100. Now, upon reaching $100, a lot of people now gave up on the product. Now, left with only 3 people contesting for the product. So what Nike does is that now they still have a lot of pairs left, but there are only 3 people demanding. Then Nike will then bring the price down again because there are now more products available than the buyers are there. So that's simply the idea of support and resistance. At the top level, there are more people selling than buying. Meanwhile, at the down level, there are more people buying than selling. So now you understand the idea of finding support and resistance. Now let's go and play with the rules on how you can actually spot the support and resistance levels. So now there are mainly 5 rules that I always implement when I'm looking for my support and resistance level. And this rule is rule number 1, use line chart. So why should you use line chart? Now let me get back to my trade. Now assuming you are a beginner, you do not know much about the support and resistance level of a thing, and then it will be difficult for you to spot your zone. So what do you do here? What you simply do is that, for example, let me change it from here to candlestick. So now take a look at this candlestick. Does the zone still really appear as they used to appear during the first chart? No. So now for you to be able to see the chart carefully, you use line chart because the line chart focuses on only the turning points of the market, and the turning points are the zones that you trade as a support and resistance trader. You simply look out for the zones and then trade those zones. And for you to get these zones as a beginner clearly, you use a line chart. So that's simply the first one, simply changing your chart to a line chart. So if you are using trading view, to change it to line chart is really simple. Come over to this bar here, and then You can simply here, you can see candlestick, halo, line, and then all the rest. For me personally, I trade more of support and resistance. Like even on my Telegram channel, I trade more of support and resistance, and I drop signals there. You can see the snapshot on your screen where I drop signals and also tell them when to get out of the market when the market is not going the right way. So now that is simply the idea here. Simply change it to line chart so that you can only focus more on the turning point, because the turning point are the zones we are going to be marking at the next stage of this video. So now I've shown you how you can turn it from candlestick to line chart. You can see I've added that as my favorite. Like the line chart is one of my favorite techniques that I've been using in recent time, and it's going well for me for my trade when trading the support and resistance. So now I've shown you the support and resistance, explained everything to you. I've shown you the rule number one is simply using. So now let me mark it out so that you don't get confused. And the rule number one is actually using a line chart. So I'm just going to cancel it off. Now the second point is actually looking out for zones. So when it comes to finding your zones, here are the things you actually need to do. First thing, you focus on only major zones. So what are major zones? Major zones are the clearest zones when looking at it in the market. And for you to find this most clearest zone, you need to use higher time frame. So now let me show you that on how you can find it using the current market movement. So now let me get back onto my trading view. So you can, okay, so these are a different analytics. So now let me get back to that particular market. So now here is it here. So now here we want to spot zones. Now the rule number two said, going back on it, the rule number two says, when looking for your zones, you should focus on only major time zones. And for you to spot those major time zones, your main attention should be on higher time frames. So now, for example, take a look at it here. We are currently in the 15-minute chart. Take a look at this in the 15-minute chart. You see how horrible the market is. Trust me, if you want to trade support and resistance and you are using this 15-minute chart, you are likely to lose a lot of trade. So my best advice for you is that you need to use higher time frames. So let's change this to higher time frames and let's see if we can spot some major zones in the market. So now come over here. You see your time frame. So now let's move to the recent part of the market. This is where the market is currently moving right now. So now let's go over to 4 hours time. So now let's take a look at it in the 4 hours. So now when you come over to the 4-hour chart, you can see that the market is more clearer. You can now see more of the turning zone. So for example, take a look at it here. You can spot clearly that here is a turning point. Here is a turning point, but I often call it the old turning point. So I like using the recent one. So here's a recent turning point. This place again is another recent turning point. These ones are what we call the major zones. They are the major zones. Reason is that they are very clear and sharp. And then to confirm that they are even the major zones, when you look at the left side of it, you also spot them here. Take a look at this one here. You can see when you take a look at the left side, you also spot it here. And then if you continue, you see that it also hits another support level here for it again, another resistance level. The same place forming support here is also forming resistance over here. So now this one thing you get to spot the major zones. When drawing your major zones, always take a look at how many times it has occurred. That's what defines it. So for me particularly, if I want to trade these major zones, one thing I actually do is that I mark out my zones and then wait for the market to retrace back to those particular level. So another place you can actually do is that, but if you take a look at the market right now, the only two places that we can actually trust on in recent time is simply this particular place. This is where our hope is that the market will fall back to. But then to see it more clearer, to make sure that this is actually true, let's go over to the 1 hour time frame. That one will give us a clearer view again on another part where we can actually spot a zone. So now if you go over to the 1 hour, if you come over to the 1 hour, you can see that there's another place being created here gradually. You can see that the market is gradually creating another level at this particular part. So why did I call this another level? Take a look at it here. The market on this particular point, after breaking through, it fell back to this particular level again. When it got to this particular level, it traded upward. And then it trended for some few minutes and then fall back to this particular zone again. So now, what you can actually do as a trader in this particular level is that you wait for this trade to actually fall back here again. You wait for it to fall back here for the third time. Then when you come back for the third time, you give it some few minutes. Reason is that we have what we call the fake retesting. So the fake retesting is simply the market trade back to this particular level. Then you think immediately hit this level, it will move upward. But then all of a sudden, it continued a downward trend. And that's where we are going to need the other part of this system to actually understand. So now this is simply how you spot the zone. You go to the higher time frame and then take a look at where the market is making reversal points. So you can see for here, this one is what we call support level. All these three that I just drew out right now, picking them one after the other. Let me delete them off. You can see all these three places that I just marked right now, all are support levels. All of these levels, I'm waiting for the market to fall back to them so that I can trade it to the upward again. You can see all these are support levels. All these ones here are support levels. So when it comes to drawing your resistance level, it's also the same thing. You take a look at the highest place the market has hit. So for me personally, based on my trading approach, if I want to trade this particular market, let me clear all of this. If I want to trade this particular market, I will not trade it at this particular level to go up. What I'll necessarily do is I'll trade it from this level. Why will I trade this from this level? Here is it. If you take a look at the chart carefully, let me come over here and then flatten the chart. If you take a look at the chart carefully, let me just draw it together. If you take a look at this, is the highest level Pounds has ever hit against Japanese yen. So this to tell you that the market will be difficult for this market to actually trade above this level. So instead of waiting for the market to trade back to this level, your main focus should be for the market to trade back to this particular level for 2 times or 3 times, and then you trade it that the market is falling downwards. That's simply the idea of how I do my own trade. So if you take a look at it carefully, you can see that it was the last time the market hit that level was September 23rd. And then after I hit that level, it took a serious downfall, and this is how I actually make my trade, and this is how I get to make a lot of profit through my trade. And that's why whenever I promise to drop signals on my Telegram channel, at times I can promise them the signal today and I wait for some few hours or even a day plus before getting the main signal to drop for them. That's simply how I do it on my Telegram channel. So my signal channel is 100% free. The link will be down in this video description. So now you simply see the idea of it is simply looking out for major place where this market is making 10. So now how do I actually pick out this particular place that the market cannot trade above this zone? So now here's one thing that will determine if the market can trade above that zone or not. Take a look at your left side. When you look at this side, you can see that there's a big space. You can see a big space at your left hand side here. So here is what I'm referring to as a big space. You can see this big space here to tell you that it will be difficult for British pounds to actually break above this level like this, but then it will be easier for it. Let me use green for that particular mark. It will be difficult to come this level whenever I hit here, but it will be easier for it to actually trade this direction. Reason is that it hasn't go above this direction for weeks, like for really so many weeks right now. The market hasn't been able to get to this particular direction. That's simply the idea here. Simply focus more on higher time frame. Use your higher time frame to pick out your zones, and then any zone you are picking, make sure that before you trade it, it has retested to it 2 to 3 times before you actually trade. Like for example, you see this one here. At this place now, this is a safer place to actually enter this market, and this is very safe. The reason why I say this place is very safe is because it has come 1, 2, 3, 4. Normally the way I trade is after I hit this level, at this particular level, I'm actually going to enter the trade. That's how I do my own trade. I just wait for it for 1, 2, then the third one I follow the market and the trade along the market. Because me personally, I don't hold my trade for too long, though I do swing trading, but I don't hold them for too long. So this is simply the idea of how I actually get my zones. It's really simple and straightforward. There's no need to complicate it. Now let me try it with a different pair, also called the Australian dollar and then United States dollar. So I actually opened a trade with this particular one few days ago actually, and I drop it in my Telegram channel as well. So now let's take a look at this market when it comes to drawing zone. So now for example, we are in the higher time frame. Can you just spot some few support levels in this market right now? Taking a look at from this level, let me get my rectangle. So taking a look at this particular pair now, Australian dollar versus United States dollar. Where can you spot as a support level in this chart? So now let me just draw out the places you should focus. Focus on this area right now. Just this area, and tell me where exactly you think you can actually spot a support level. There is no doubt that this one is really clear on the higher time frame, which is the 4-hour chart. If I should place it here right there, you can see this has been one of the most consistent part of this particular trade. So if you had traded this market at this level, you will be in profit. Traded it here at this level, you will be in profit. Traded it here at this level, you will be in profit. Why will you be in profit despite this huge dip? Let me use my position taker to show you why you will be in profit. Because if you are trading here, normally your take profit will be here, and then your stop loss is times 2 of your take profit. Your take profit is times 2 of your stop loss. So meaning you should have been in this sort of zone. This is a sort of trade you would have initiated if you understand this strategy carefully. You would have initiated this sort of trade. So meaning you will be in profit if you are traded this particular strategy using the Australian dollar and the US dollar market. So now this simply it. You can see it was really easy finding your support and resistance level. So if you need more videos on this, you can let me know and I'm going to help you out with them. So when finding your support and resistance level, always put this in mind. Don't just focus on 4 hours. So once you see your zones in the 4 hours like this, the next thing is that go down to the 1 hour chart also. Now take a look at the 1 hour chart and see if those places are still fresh. If they are not fresh, feel free, take out other zones. So why should you take out all of these zones? After taking out all of these zones, when you want to place your main trade, this where the key thing, you fall back to the 4 hours again and then see if this place you took was consistent. If it wasn't consistent, you simply ignore it. Like for me right now, I'm not going to focus on all these old zones again. If I'm to enter this trade right now, my main focus will be on this particular level here. I'll take the recent point here, which is this current point that the market is currently at. That's where I'm going to focus on. Why will I focus on it? Because if I should take a look at the left, there have been times whereby the market got to these particular levels and then continued in that direction. And you see, so that's simply why I will focus on it. So now I will simply be here and then wait for the market to go back upwards, come down, go again, then I enter the trade with it. And in most of the cases, once the price is coming back upwards, I wait for it to actually hit this level and then trade it downwards also. That's simply how I do a lot of double trading, and trust me, it's actually yield me a lot of profit trading in that particular strategy. So now I hope you understand the benefit of using the higher time frame and then focusing more on the major zones. So now the next thing is simply look for your take profit and stop loss. You need to focus on your left hand side. So what do I mean by your left hand side? So assuming, for example, you want to place a trade at this particular market of so now let me come over to the GBP JPY. Let me just clear all my drawings, remove all drawings, and then fall back to the 4 hours. Now let me zoom it out. So assuming I want to place a trade on the GBP JPY right now, and I want to place, actually I will use a limit trade in this sort of market. So now let me stretch it out so I can actually see it clearly. So now if you take a look at it here, if I wanted to trade it, this is the level in which I will trade it here, which is this top level. So now if I want to enter this market at this top level, for example, I'm trading it that the market will fall downwards. So now what I actually do for my take profit is I'll look at this left hand side. When I say look at this left, I'll see the farthest place the market has fallen to in recent time. So what is the farthest distance it has fallen onto? It's simply this level here. This is the farthest distance it has reached. So if I want to enter this market, this is what I'll simply do. Since it's a short market, I'll simply place it here, and then my take profit will be here. Since I'll be using my left hand side to actually take console it. So when you're entering trade using support and resistance, look at your left hand side for your take profit and then stop loss, because your left hand side determines how far the market can move considering recent motions. So that's simply what you need to look out for. So now my take profit I'll put at this particular level here. This will be my take profit 1. And then my take profit 2 can be way down depending on the kind of trade. If I'm doing day trading, then I can leave it here. But if I'm doing swing trading, which is a very long term trade, I can keep it here depending on what is moving between those two industries. And then for my stop loss also, I'll take a look at my left hand side. What is the highest level the market has reached in recent weeks? So you can see this is, for this particular level, this is August 23rd, 10 a.m. and this is the highest the market has actually reached. So let me just put it here, meaning my stop loss is actually in a very safe zone, meaning it will be difficult for British pounds to actually break above this zone. This is simply the technique here. Simply look at your left hand side. Simply look at your left hand side for your stop loss and take profit. So in case you don't know much about stop loss and take profit, you can watch the video that will be linked down in this particular video description. You can go and watch it. That video will take you through everything you need to know about stop loss and take profit. And then the final thing here, which is really important, I always drag on, is simply keep your eye on news. Why did I say you should place your eye on news? So now using my Telegram signal as a clear example, let me go over to Telegram. So sorry, let me go back to Telegram, Windows X, Telegram. Let me use that my last signal I actually dropped as a clear example in this tutorial. So now, here's the signal I actually dropped on. Then you can see signal pair, Australian dollar versus US dollar, order type, buy limit. So when I sight trade at a very distance, like when I sight a trade far away, I'll simply use the buy limit system. Why do I use this system? Because I might not be there when this trade might be going on. So to make sure that I'm not losing out on anything that has to do with the trade, I use the buy limit. So you can see I told them other type buy limit, then buy at 0.64160. So now coming back to the chart, Australian dollar versus US dollar. Let me look at that particular level here. It should be somewhere here. $0.4160. So way down. Okay. So let me just say at this level here. So I asked them to buy at this particular level here. And then you can see that after the market got to this particular level, then it moves upwards. So it was actually from yesterday. So now let me go over to 1 hour charts. You can see after the market got to this particular level here, then it traded to this particular this very level. This was November 23rd, coming over to recent days. So you might not get it clear. So let me just highlight it. So initially I told them that take profit one is at 0.4673. 0.4673, which is really way up. And then come again, take profit 2 is 0.651490. But then stop loss should be 0.63684. So now after giving them this order, I waited for some time and then take a look at it. Take a look at what I dropped in the group. Hope you all have placed this order. NA session, which is the North American session, was held, but thank God we are back into profit, because after placing the trade, we were actually running at loss. The market fall against us, and that is the point you can see here. It really appears to be really tiny on the screen right now. You see, it looks tiny on the screen right now. This is where we went into loss. You can see it was really tiny, but trust me, depending on the lot size you traded, you will know the value that you were actually missing at that point. And then you can see till then, if you traded, you are over 30 pips up again, then you can get out of the market. So you can see you can get out of the trade now. Dollar is likely to recover. So I gave them this particular message when the price actually hits this level. The moment the price actually hits this level, I asked them to get out of the market. Reason is that I realized that dollar was trying to put up some power against the Australian dollar. So what I just told them to get out of the market. And how did I know this? Because I was focusing on news. So now in my last video, I actually recommended a website where I normally go for my news. So now I'm going to recommend it in this video also the website is called my FS book. So whenever I place a trade, I always put my eye on my FS news and some other Twitter channels that I follow that they drop foreign exchange news. So you can see there are a lot of news is here right now, economic calendar. So I normally go through this place often before placing a trade and after placing a trade to make sure that I'm in a safe hand. So after dollar got to this level, which is 0.6457, and we entered at 0.64160. So you can see the increment. I asked everyone to get out of the trade because I noticed dollar was actually trying to put up weights against. And if you take a look at it, this was the highest high he hitted. Since then, it traded downwards, and this is the benefit of putting your eye on news when you are trading. I always advise my traders that whenever you place a trade, always put your eye on news. Then once you see that the news is not in favor of your favorite currency that you are trading, then try to get out of the market. And this is why the final part of this part is actually important. You simply place your eye on news. So now going back again on every single thing you need to know when trading this system is simply one, use line charts because they show you the main point where the market is actually changing direction. Secondly, focus on only major zones. Major zones are simply the zones that stand out among any other zones. They are not places where the market move in haphazard direction, no, but they are places whereby whenever the market hits there, it moves straight forward. And then the third one is simply use higher time frame. So the higher your time frame, the clearer you can see the market. And then fourthly, simply look at your left side for your stop loss and take profit depending on which direction you are trading. Your left side should be your main decision maker. And then finally, place your eye on news. In case the news is going against your favorite currency pair, I will advise you get out of the trade for safety reasons. So hope you find this video helpful. Don't forget to smash that subscribe button, like this video, and tell me what you feel down in the comment section. So with that already said, have a nice day. Bye.